Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, January 15, 2015. And here we go. I remember this trend line I drew in last night, and we held above it yesterday, but today we broke through, and now we came into basically this pivot low here. We're close enough. And I think there's a couple of scenarios I want to go over. One is the obvious, does the market continue down? And as I make this video, the S&P futures are down about 13 points. So as it stands now, unless something positive happens overnight, whether it be in Asia or early in the morning in Europe, you can expect the market to open lower tomorrow. But here's what I think I would rather see, and I'll explain why in a minute. I'd rather see the market open lower and go down and finish on a low tomorrow. And the reason being is, and you know how once in a while I give you a short-term cycle day as a day of the week, plus or minus one day, that the market should turn. So here's what we have. We have Martin Luther King Day on the 20th, which is Monday. The market's going to be closed, okay? Now, if we finish on a low tomorrow, okay, my cycle turn day happens to be the 20th. And since the market's closed on the 20th and it's plus or minus one day, okay, I have to believe that either tomorrow or Wednesday, Tuesday, if this is going to play out, is going to wind up to be a market turn. So since the market was going down today, okay, we can turn tomorrow, all right? But the issue is because the 20th is on Monday, and that's my cycle turn day, it could also turn back down on Tuesday. And that's a scenario I don't want to see. But what I would rather see is the market finish down tomorrow, okay, and then have the cycle turn day plus one day Tuesday go up from there because, and here's the kicker, because, okay, I think that we're in the window for the market to rally for, more than a couple of days. I think the next turn could be a rally for at least a couple of weeks. And money can be made if you catch the beginning of the rally, but you can't catch a falling knife. So here we are. If the market should continue down tomorrow, okay, we most likely will test and stop at worst case on this 200 period moving average tomorrow. That's a little ways down there. But if the market sells hard, and I just don't think this could happen tomorrow, but we still can go into this gap window and this gap fill area, and that would be more likely scenario if we continue down early next week. This is where I think we would wind up. And regardless of when that turn happens, okay, I think next week you'll start to see a low in the market. And I think we'll put in a weekly bottom. And that's the most important thing I can say all night is I think next week is when we put in a weekly bottom, which means we can get a multi-week rally off that bottom, okay? So that's what I'm trying to say. But I'm trying to say don't try and pick a bottom here and think that this trend line is going to be recaptured and we just go up from here. We could still see significant downside in the market, which from here could mean another 80 S&P points, 70 S&P points, something in that neighborhood, okay? And that will scare a lot of longs out of the market, and it will continue to push shorts into the market, further pushing it downward, okay? So I know that was a mouthful. I hope I didn't confuse anybody. If not, just rewind and listen to it again, because the net is we can still come down into this area. However, I think next week you're going to see a weekly bottom put in the market. That's the most important thing that you can take away. Where these levels go, I think this level could hold, but if it doesn't, we're going to go into this gap window here and potentially a little bit lower. So that's the net on the SPY. All right, let's move over to the gold market. Oh, by the way, I should mention, I know there was a bunch of news today about Switzerland and how they're lifting their peg to the currency against the euro and all that stuff. And that's fine. And that's whether that's the excuse for a down market here or not, I don't know. Europe seemed to rally. So I can't make heads or tails of that. But what I can tell you is that smells like Europe is getting ready to do a real quantitative easing program. And if they do a quantitative easing program just the same as Japan announced a while ago that they're still doing, okay, when we're getting the bookends, Japan and Europe, on either side of us doing quantitative easing, you can bet your bottom dollar that you're going to see a rally in our stock market. So that's just another arrow in the quiver. And whether that happens Tuesday of next week or later in the week, I think next week we put in the weekly bottom. Okay, let's move on. Let's go to gold. GLD, okay, had another monster day. And remember I was telling you probably for 4 or 5 weeks already down here, okay, that I thought that it was going to be, or I knew that it was a seasonally positive period for gold. Then I gave you the number 1240 to 1245, which we hit yesterday and the day before, coinciding with this number here on the GLD, which had a high of 119.32. Okay, so that was basically a direct hit. It was 1244.50 was the direct hit yesterday. And then remember, over the last several days, I've been saying 1240 to 1245 or higher. Today was the or higher. Okay, so I think there can be some more upside even in this move. I didn't expect it. I thought we would consolidate for a while and then move higher, but the or higher played out. And in terms of the or higher, how high can we go? I think at this point we can get to this gap window and potentially this gap fill here, where let's say it would be between 122.5 and maybe 123 or even higher in the price of GLD going forward from here. So if it seems like gold's going up as the market's going down. Well, it doesn't seem like it is. So if the market continues down for another couple of days, you're going to get up into this area in GLD. Okay, so this is playing out, to the picture. Call the number, which was great. That felt good. And then or higher is starting to work out. And or higher, I'm telling you that we can get up into this area here. Let's call it 123, give or take, in the price of GLD. Okay. Now let's move on to the broken record oil market. And really, nothing changed. It turned out that yesterday, this is the USO, yesterday when I said, maybe this was just a bounce, it didn't feel like a reversal day. It didn't feel like a capitulation low reversal day that we were looking for. And I'll show you the reversal day we were looking for again in JP Morgan because that crapped out on us today, but I'll explain that one later. So today, all we did was reverse back down, and as we speak now, the price of crude oil is $46.60, and it was down a couple of bucks today. And so all this was another bounce, and the market is still weak. And if you look at the weekly chart, even of USO, it'll just tell the picture. Look at that, folks. There's no bottom in sight. You have to have a capitulation low. You have to have a real scare me out of the market low earlier in the day. It has to reverse higher on high volume, and it has to finish at the high of the day, or in this case, the high of the week, okay, in order for or put in a bottoming tail for the week, but higher for the day. Let's go back to the daily chart. You have to have one of those capitulation. You need a tail, you need high volume, and you need to finish on the high of the day for this market to put in a bottom, and we just haven't seen it. I know it sounds like a broken record, but we have not seen the bottom in oil yet. It is an amazing market. It is an amazing fall. It went from around $100, $115 a barrel all the way down to next to nothing. Right now we're at 46.5 and still going lower. Where are we going to go? I still say 42.5 to 43.5 is in the cards, and it could certainly happen within the month of January. All right, let me mention JP Morgan because I brought that up last night, and it's only fair that I can continue talking about it because I showed you what I said was a classic bottoming tail, okay? Yesterday, we had a tail. All right, we had high volume. We had a reversal. It finished near the high of the day. Okay, I got my members in down here. Okay, at what was it? I think about 56.25. Okay, and today the stock crapped out and it went down quite a bit. Okay, went down a couple of bucks. Not even, about $1.81, I believe, was the number on JPM. So this bottoming tail actually failed. However, okay. there's two things going on. All right, you're coming into another bottom is number one on the daily chart. Number two, okay, since I believe that next week's going to put in a weekly low, okay, the market's not going to rally without the financials rallying as well. And, what we own here in JP Morgan is the best enterprise commercial bank in the country. And what it's a very liquid stock, and it's not going to fall apart overnight because they have some legal issues or they're selling a division, closing down a division. Whatever the news was, they missed earnings. They didn't miss earnings. They make a ton of money. Okay, they're in the business of making money. They make plenty of money. So as long as we abide by the 10% stop rule, okay, and we're nowhere near there, I'm holding on to the JPM even though this bottoming tail failed. And that is a failure. It just is what it is, but I gave you the reasons why I'm okay holding this stock. But what you would normally do in a case like this, when a pattern fails, and they do fail, right? This works like 80, 85% of the time. This happens to be one of the 15% or 20% of the time it doesn't work. You basically, on a close below this low, you're normally out of the stock. And if you played the bottoming tail correctly, it's a very small loss in comparison to the 10% rule, for example. So it's just a little lesson, but I gave you good reasons why I'm going to let the 10% rule rule whether I'm in this stock or not necessarily the failure of this tail because of the other issues I discussed about next week. All right, so I think that's about everything I wanted to cover tonight. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.